Good morning, good afternoon, good evening. Whenever you're watching this video, y'all, sometimes I'm gonna tell you Jesus don't like ugly. Cause this is my second time recording this video for y'all. And it's going out later than normal because your girl did not record it in a timely fashion. But we still gonna be on the topic. For those of y'all who are like, who is this chick? My whole disposition is going to be nicer. Because obviously I was nice nasty in the first video. And Jesus said, let me go and mute her microphone so can't nobody hear. I waxed deep for 20 some minutes. And that thing said no audio. And baby, I was doing all the hand things and doing all the stuff. So maybe I need to calm my tail down. That's the sign of the Lord. Because sometimes when your technology don't act right, because God said, don't put that out there. Let me save her from herself. Let me help her help herself. She out here talking about some help you, help us, help you, help yourself. When I need to help her, help herself. Because she about to do it wrong. For those of y'all who do not know me and are like, what is she talking about? Why is she so animated? I'm none other than Patrice Elberry, EA. That EA is for Enrolled Agent, aka the Tax Cop. And I am in your email box again this week talking about the research and development tax credit like we did last week. Except for I'm not at the same time, just because technology be technology. And isn't it imperative that we're talking about this stuff? Because technology is going to come up in this week's topic. So I did my research and talked to y'all last week, and we went directly to the IRS page because I like to start with the top of the criteria. We got to go to the top of the food chain, figure out what they're saying before we drill down. And the biggest thing I still could not narrow down very well was, well, who does this apply to? Who can take it? And what are the costs that they can take? So I found this article via Bloomberg Tax. And y'all know, if Bloomberg talking about it, and this is from April 2025, if Bloomberg is talking about it, Bloomberg is the people, they talk investment news, they do all kinds of things, and they have different arms of Bloomberg, and they got a whole tax section, and I like the way the article is written and broken down, so we're going to go through that article together. I will be reading it to you. I don't think y'all done. I don't. But it's easier for me to go through it, give you the commentary. We're going to give you the link so that when you go back, you're like, oh, this is the part she was talking about. And this section falls up underneath corporate tax planning. Now, before we go further, and you just la, because you like, first of all, I ain't a corporation. Second of all, I am not tax planning. Lay sigh. Put them shoulders back and your chest out. We're going to talk about what is in this because your girl not done. She's still researching stuff and she feels some kind of way. And I'm not going to lie to you. That's probably what got me. I was making all the faces. I was giving all the hints. I was doing all the attitude. But this time I'm going to do it nice because I want y'all to get the information. And I want y'all to know that your girl not done. All right, so let's jump over to the article itself. And let's go through the parts that I feel we should discuss. All right, so this is from Bloomberg, like I told y'all. Article written April 25th, 2025. It states out and says, the research and development tax credit is one of the most significant domestic tax credits remaining under current tax law. We're talking Tax Cut and Jobs Act. Even this is pre One Big Beautiful Bill, okay? Savvy corporate tax teams can use this important tool to implement federal tax planning strategies that maximize their company's value. All right, so when we talking about stuff, and it's not like y'all didn't know, everybody's, this is for the wealth people, right? This research and development was pinpointed, right? Because some people have more money than others. And I'm not talking about the billionaires. I'm talking about them lobbyists, right? Where somebody had an interest and said, hey, these corporations, we're not 100% happy with what's going on in these tax streets. So we want you to do a little something. And because we doing a whole lot of research and development and bringing more stuff to the market, right? Because this is a capitalist country. And we all about consumerism. And so therefore, we always researching and developing to put something else out on the market. Give us some incentive. You want us to come home and you want us to be able to do it. But you're going to have to make it worth our while for us to do it domestically. That's Patrice paraphrase. That is not what Bloomberg said. That's why you seeing me. Okay? So let's go back into it. But the tax issues around R&D, investment, and acquisitions are complex, and like many other aspects of corporate tax planning, require forethought and a deep understanding of recent changes, such as the Section 174 amortization triggered in 2022 by the Tax Cut and Jobs Act. That's Trump 1. Tax professionals must stay up to date on developments to guide the right tax optimized decisions both now and in the future. AKA, Bloomberg Tax hit on a couple of different things. They said it don't matter if it's any tax planning. Tax planning is looking forward. It's not looking back and trying to fix what we put on the tax return. It's how do we leverage what's coming down the pike? How do we leverage what's in the tax code? And it also said, hey, tax pros, do your freaking job. Continuing education is imperative. Stuff is always moving. You got to have your butt in some sort of training and understand how to leverage this so you can bring more value to the marketplace, whether it be your corporate client, whether it be your individual client, whether it be your partnership client. You have got to bring more value, and the best way to do it is to stay on top of everything that's going on and understand the changes at the federal and state levels so that you can advise accordingly and say, hey, I see something that may be beneficial for you as we're coming down the pike. We maybe can't institute it in 2026, but if we put stuff in place now, by the time it comes on the scene in 2027, we can actually take advantage of it. All right? So keep that in mind. We gotta look back, because that's what we do in tax prep for, looking back. We gotta look forward, and we gotta make it all work and be able to advise accordingly so that it helps you legally. And I'm gonna say this because my name is the tax cop. We're going to legally find ways to reduce your tax liability. I did not say anything about avoiding taxes, not paying tax. We are reducing tax liability per what the code allows us to do and what the new laws allow us to do. You just got to know what those provisions do so that you can actually implement them, record them accordingly, make sure the accounting aligns with everything that is happening in that business or even in your life, right? So that we don't have to deal with no smoke. Because yours truly, she don't want the smoke. She can be ready for the smoke, but she don't want the smoke if she don't got to have it. This is why I ask for so much documentation ahead of time so that I can be ready if the smoke comes. All right? Let's go back. All right, so read on to gain timely and valuable insight into the R&D tax credit, including eligibility, deductions, credit limitation, amortization, and more. They've talked about a whole lot. All right, so we got to talk about it. Congress created 2 incentives for a business to invest in research activities. Now, I know this is talking about corporate. I want y'all to see my face. I know this is talking about corporate, but I want y'all to understand. Say Congress, that's who writes laws, right? Congress wanted to give incentives to businesses. Let's talk about these incentives, and then we want to talk about the businesses that they incentivized. The ability to capitalize and amortize specified research or experimental expenditures over 5 years. Normally, you amortize over 15, right? 15 years if the research is performed outside the U.S. But they say if you doing it at home, we gonna let you get in front of it. We gonna let you amortize over 5, right? The ability to claim an immediate credit for qualified research expenses. Eligible research costs include those paid or incurred for research conducted by the taxpayer. That could be the corporation itself or the business itself, as well as research conducted on the taxpayer's behalf. So if you hire somebody to do it for you, because you hired somebody to do trials and research as you're going through patents for different stuff, if you outsource that, you still get to claim it because you paid it. Hopefully you did, right? Okay, so for taxable years beginning on January 1st, 2022, Section 174 of the Internal Revenue Code permits a deduction for specified research or experimental expenditures. The change marks the first time since 1954 that companies have had to amortize their research and development costs rather than immediately deduct those expenses, right? And there's a reason why they had them amortizing it. We got these are some of the requirements. It must be incurred in connection with taxpayers' trade or business, represent a research and development cost in experimental or laboratory sense. Y'all already like, hey, Trees, this don't even apply to me, right? The purpose of Internal Revenue Code Section 174 was to incentivize investment in research and development and breakthrough technologies by eliminating the uncertainty concerning the tax treatment of such expenditures. Research and experimentation are basic activities that must precede the development and application to production of new techniques and equipment, as well as the development and manufacture of new products. Qualifying expenses, because it depends on what you can deduct, right? What qualifies? Qualifying expenses are a broad category. Y'all, even this article, right? The IRS said it, Bloomberg said it. I told y'all last week. Qualifying expenses is broad as heck, but it laid out here that these include patent fees, salaries, drawing and models, and even attorney's fees. Why? Because they don't want them class action suits, baby. So they get in front of it. That's why they pay them attorneys that good money. All right, so patents. When y'all think about patents, I immediately think medical. I immediately think technology. I immediately think that, right? Patents and new technologies and stuff to get in front of. Trademarking and getting patents is a great investment. It's a way to protect your assets because assets, like for instance, the brand of tax cop, that is trademark. It's a registered trademark. It is intellectual property and it will grow in value as the business grows, right? It is an asset. It is not like patents. They're going to have future value. They like, baby, it costs a lot of money for us to do this. We're going to put a lot of people behind this stuff. We're going to be in the labs. We're going to be testing. We're going to be doing trials. We're going to figure out what works. You can't sue us if something happened to you. We got to get all that. Them expenses. And we want the right to be able to do what we need to do because we didn't put a lot of money up front before we ever hit the street. Now, the one thing I'm going to stress is that every business has some sort of research and development too. I don't care what you're talking about. We are talking, every business has a component that has research and development to it because before you let it go out to the people, okay, does this do it? Is my funnel working? Did I do? Every business got it, but not every last one of us getting the benefit of this deduction. I'm trying to keep it clean because I want the audio to go and I do not want the good Lord to be like, look, baby, I'm trying, you want to take 3? You want to do it again? All right. So we're going to play nice. Let's go back to what it's saying. All right. We stressing. Patent fees, salaries, drawing and models, and even attorney fees are items that could be qualified expenses. All right? Let's go here. The amortization mandate resulted in higher tax bills. So under the Tax Cut Jobs Act, we got higher tax bills and higher compliance costs for businesses across the country. What? They had to prove it and support it, and they couldn't deduct it, right? As a result, American innovation and competitiveness on the international stage has decreased. Let me say it a different way. Because y'all listen to these tariffs. Let me say it a totally different way. America, you was not creative. You was being 100% consumers. Y'all getting stuff from everywhere else but here. It is not homegrown. It's not made in the USA. It don't have a red, white, and blue stamp on it or anything like that. Even though y'all supposed to be doing that, y'all been going abroad because it's more competitive, right? They do it quicker, faster, cheaper for everybody in other countries. And then they ship it here, and then your profits be out the roof. That's Patrice paraphrase. That's not even a tax cop paraphrase. That's Patrice paraphrase. Okay? That's what that says. As a result, right, American innovation and competitiveness on the international stage has decreased. After previously growing more than 6.5%, not 65%, we ain't done that in a while, 6.5% annually, research and development spending in the U.S. increased only 3.5% over the course of 2022, and in 2023, it decreased. In response, a bipartisan group of U.S. lawmakers reintroduced the American Innovation and Research Development Competitiveness Act of 2025. What year is it? 2025, a bill that mirrors previously introduced legislation. It aims to amend the 1986 Internal Revenue Code to reinstate immediate research and development expenses so that the businesses can deduct research and development expenses in the tax year that they occur. What? I don't have to amortize anymore? I can expense it in the year that I actually went and spent the money? You don't say. Think about it this way. Organizational and startup costs, there's a limit. It's a $5,000 limit, right? When we start in a business. And if you have if you incurred more than $5,000 to start your business, which a lot of businesses do, then what happens is the remaining amount would be amortized over 15 years. Okay, that's what happens, right? You get 5,000 organizational startup, we get to expense them in the first year. The business is open and operating. Anything over that, it's got to go on the balance sheet. We got to amortize it. So we're going to slow leak it. You're going to get all the expenses. You're just not going to get them all up front. Now what's happening is we are now saying, hey, so I'm going to use a nice round number, 50,000, 5,000, right? You could have let me start up and do all this kind of stuff. 45,000, I got to depreciate. I got to amortize over 15 years. Okay. Now you telling me that I could do the whole 50 in the first year? That can make a difference as to how much I pay in taxes and have enough money from investors, etc., to be able to go out here and put my prototype out on the market quicker, because now I got more money to put into research and development. I'm going to put it in that perspective. That's really where it's going. And you can do it here. But listen to what these people are saying, right? According to the National Association of Manufacturers, a return to immediate expensing would drive job creation. 75% of companies' research and development spending goes to worker salaries. A recent report published by the National Association of Manufacturers shows that for every $1 billion spent on research and development, 17,000 American jobs are supported. Now, this is all I'm saying. Y'all, we see a lot of talk about robots. We see a lot of talk about AI. We see a lot of talk about whole industries being removed, going to be removed off of this technologies. I would love for this to be true. It say immediate expenses would drive. It didn't say it should. It didn't say it will, even though would is a past tense of will, right? It didn't say it's a mandate. It didn't say none of that. It said, according to this National Association of Manufacturers, I'm not going to tell you they're not lobbying, right? You got these organizations, and even organizations I'm part of for professional groups, they lobbying on behalf of the people so that our state gets heard, right? And so manufacturers are like, hey, baby, don't kick us out here. We can bring jobs if you just let us expense. Now, are they going to bring jobs? Only the good Lord know. We going to see what's going to happen. What's going to happen? You getting it. We going to see what's going to happen. Right? Because now y'all done seen it. Let's jump down. The passage of it would reduce the tax compliance burden on businesses, incentivize greater investment in research and technological advancements, and ensure that the U.S. remains competitive with other nations that offer more favorable R&D tax treatments. Is that another reason why we having these trade wars? Go do the research. I don't know. One of the things I think that is interesting here is that here's the states, right? And it says, hover over state to see how laws stack up to Internal Revenue Code 174, Section 174. The blue represents everybody that's conforming. This is based off of 24 information. The purple is not conforming, and then they just said, hey, some people it's complicated. Y'all see it's complicated in Texas with all that land. It's complicated. We not going 100% conform. It's a lot going on over here. Okay? I thought that was interesting. Now, what qualifies for the research and development tax credit? You gotta meet four tests. First of all, you gotta adhere to Section 174. It's gotta incur with the trade or business that you're doing. Can't be no, you know what I'm saying? It's gotta be what you're doing for your trade or business. Technological information test. Technology gotta be involved in it in some way or shape or form. I'm gonna let you read it, right? Technology gotta be involved. You got to do some experimentation, meaning we got to test it out, make sure it works, have option A and option B. Now, the one thing I'm going to point out here is research related to style, taste, cosmetic, or seasonal design is not qualified research. I'm going to say it again. Style, taste, cosmetic or seasonal design is not qualified. Those are very low entry for business. I love them. Who can't start a t-shirt business, right? So that's style, right? Who can't do a food truck, or you know what I'm saying, plate dinners and all this kind of stuff? That's taste. Cosmetic, y'all know we like these brands that's popped up, especially during COVID and stuff. Brand A and brand B, and here go some samples and try this. Does it come off? Does your lipstick come off? What about this beauty product? Or seasonal design factors. That's low entry if you know what you're doing and you can get with a manufacturer abroad or somewhere else, right? Cosmetic deodorants, we seeing a lot more natural lotions and deodorants and things of this nature coming up and competing against the big boys. I'm just saying, the people made sure they knew who was going to be able to get this and who was not. I'm still looking though. I'm still looking. Your girl's still looking. All right. And then we got a business component. Now, what are the eligible expenses? Employee wages, supplies used to conduct the qualified research, and computers. What is not? This right here. This list is longer than what is. It's not this, but it's not this. It can't be this. It can't. Y'all read the list, right? The biggest thing is who's eligible, right? Tax professionals should refer to Internal Revenue Code Section 174, which means we're going to go to 174 when determining who or what qualifies for research and development tax credit. According to advisory firm Cherry Becquerel, y'all, my hooked on phonics might have jacked this thing up. If my hooked on phonics jacked it up, my bad, y'all. It might not sound the same to you, but I got to get it straight, okay? All right. Research and development tax deductions have once been associated only with businesses working in fields such as biotechnology and pharmacological. However, the firm notes the recent U.S. Department of Treasury regulations have substantially broadened the range of taxpayers eligible for the research and development tax credit. Case law, which means that now your girl gonna go pull out some case law, suggests that a taxpayer may establish the research expenditures were made in connection with a trade or business by showing a non-tax profit motive and active involvement demonstrated by substantial and regular involvement in the activity. A good faith intention to make a profit is required. You got to be in business to be making a profit. It don't say you got to show you made a profit, but the expectation of profit need not be reasonable. Courts have held that expenditures of startup enterprises are deductible where the taxpayer demonstrates a realistic prospect. To this end, an objective intent to enter a trade or business and the capability to do so must be shown. I'm not gonna say must not be shown. And I already talked about what we were talking about. I already talked about. I'm trying to think. I've already talked about the startup costs, organizational costs, etc. And then the rest of the article, y'all will see, tells them, hey, request a demo, come hit up Bloomberg Tax. It was a great way to get them to be like, hey, here's a way to learn some different information. I just want to say, your girl not done. She's still researching, because this narrows it down and sums it up very well. If you read the article, it's so much quicker than listening to me, right? Listening to me is just entertainment. And you get to hear my take and my sauce on it. But I definitely want you all to realize that I'm still digging, because if there's I told you, every business has a research and development component. If there is a way that you can actually break out those portions that fall under this criteria, Section 174, then we need to be able to make sure that that is accounted for correctly. And so those people that are in business can actually leverage this, right? Because first of all, you want to make sure that you didn't expense something and you weren't supposed to expense it. Now you can expense it, right? And you want to make sure that if it's supposed to be amortized, that it was. And if you could actually switch some stuff up and now you're incurring more stuff or you're starting out because you had to pivot, you want to be in a better position to be able to say, okay, I'm starting this endeavor. I know this. I want to plan accordingly. I need to get in front of it. It's capital intense. I have to do a lot of research to make sure the market want it before I put it out here. How do I actually get some benefit before I ever get some profit if I do from this thing? Because it might go to market and flop, but it might not. So how do I get myself out there and still be able to leverage this? This is something we need to look into. Now it is tight because they told us no cosmetic, no fabric, no tasting, no seasonal design. What? You tied my hands behind my back. How dare you? So your girl going to go look at some case stuff, going back and looking at 174 so that we can actually figure out, is there a way for people that are not necessarily at a corporate tier, has all this money, or doing major manufacturing at that level, can get some of this, right? Is there a way for, I don't want to say the common person, but is there a way that we can leverage this portion of the code, and how do we do it so that it benefits us and that we are doing it legally, keeping our support and our documentation, and take advantage of what's here for us? All right. Yeah, and I didn't talk about this 80% rule. We'll come back to that. More importantly, we're going to share the article so you can read it for yourself. Come back and ask more questions. Next week will be our monthly newsletter. And then we're going to hit this research and development thing again because your girl nosy and she really is digging because she's looking for a way to make this beneficial, not only for herself, but for her clients that are outside the software and tech space. Because she does have a couple of clients that are actually in the software space, but outside. And so until next week, and I pray that I said it nicely, Lord. Jesus. I think I smiled a lot more this time and I was a lot more friendly, Jesus. Please let it go through so that we can get this out. And until next week, I'ma holla at y'all.